Welcome to the Teaching Tax Flow Qualified Business Income or QBI Deduction mini lesson. We have a lot of visual aids with this mini lesson, so you might want to pause it as you go through and open up your TTF on another monitor to kind of follow along. But qualified business income deduction, otherwise known as Section 199A deduction, was born with the passing of the Tax Cuts and Jobs Act of 2017. Let's dive into the mini lesson. We're going to talk about his birth that I just mentioned. We're going to talk about eligibility in this concept of specified service trader business. That's very important. But then we're going to walk through the IRS's deduction reporting and then some calls to action. So let's dive in to QBI's birth. We're looking at a bit of code here, and I know that's not the most fun or exciting piece, but it's very important to understand where this deduction derived from. I mean, like I said, with the Tax Cuts and Jobs Act of 2017, corporate tax rates went down to a flat 21%, and to level the playing field for individuals, small business owners, the qualified business income deduction or Section 199A deduction was born. And that deduction is up to 20% of your net business income. We're going to talk about what that actually means and some of those limitations next. But what you're looking at, like I said, this is just text directly from the Tax Cuts and Jobs Act. Now, this is where I think you might want to consider pausing this mini lesson if you're working through your situation. This is a graph that really lays out how to qualify for this very valuable QBI or Section 199A deduction. There are income limitations to the deduction. The other thing to understand is that the deduction isn't just 20% of your net business income. You can still qualify if you have allocated wages or allocated assets. So let's look at this chart and how to use it. The first thing you're going to look at is, what is your filing status? Are you married filing jointly? And then yes, you're going to go down this column. If you're no, you're going to go down the column on the right. You can see that there are certain income thresholds based that could potentially phase you out of the deduction. By default, most people are going to fall into this area right here, that their income, if they're married filing joint or not married filing joint filing status, and they're going to have an income, taxable income, not adjusted gross income, taxable income less than that threshold amount for 2022, then it's a straight 20% QBI deduction. So that's a 20% deduction based on that qualified business income. If your taxable income is greater than these amounts here, then the deduction could start to change. The other factor is if you're a SSTB, which stands for Specified Trade or Specified Service Trader Business. We put that definition down here. There's a little bit of gray area there. The IRS has come out with some guidance, but in general, if you're a Specified Service Trader Business, it has a negative effect on you being able to deduct the QBI. So you could see that if you go down either this column or this column, there's a chance that you are a yes to all three of these questions. You could have a disallowance of qualified business income. But I want to mention one more time, there are three ways to qualify. Either 20% of your business income, a percentage of your wage base, a percentage of your asset base. So make sure you're really looking at your tax return and determining if you're taking advantage of this qualified business income deduction. All right, let's look at the IRS reporting. I mentioned you're going to look at your tax return. This 8995 form will be attached to your tax return if you are taking advantage of the QBI deduction. There's a simplified computation, and then there's a more advanced computation, thus the 8995A, 8995. One important thing to remember, the qualified business income deduction is something you receive on your personal tax return. A flow-through entity, like a multi-member LLC, a partnership, both of those filing a Form 1065, or an S corporation, the deduction doesn't occur on those entity tax returns. Those entities will provide you with what's called a K-1 form. The information from that K-1 form is put onto your personal tax return, and the deduction is on your personal tax return. That's where the phase-outs occur. And be very cognizant of you being involved with several different businesses with different K-1s. Now, there is some opportunity with the qualified business income deduction based on not only that business income limitation, the W-2 or wage-based limitation, or the asset limitation. But anyway, 899.5 and 899.5A, these are the forms you're going to look on your tax return for that qualified business income deduction. That deduction will flow from those forms on your Form 1040. Remember, I already mentioned, this is not an entity deduction. The deduction comes on your personal return. Line 13 of the 1040 is where the qualified business income deduction lives. So this is something that comes off of your adjusted gross income before you calculate taxable income. All right, a lot of visual aids and a lot of information thrown at you. Let's look at our calls to action. Review your tax return to determine if you're taking advantage of this QBI deduction. Review the list of QBI eligible investments. So there are different types of investments that provide you with qualified business income. Doesn't always have to be a business. It could be, we can look at those investments. I'm going to flip back up here. Several investments over here. Okay, doesn't have to be a business in over here. There are different types of investments that you can receive qualified business income deductions flowing on your personal return via K-1 or 1099. If your QBI deduction is limited, really look at taking advantage of some tax strategies that will reduce or get rid of that limitation. That could be many of our red diagnosis strategies in the teaching tax flow ecosystem. All right, I know this was a very filled up mini lesson. So if you have to pause and listen to it a couple of times, no problem. Definitely take advantage of our community pages and ask any questions. Qualified business income deduction, an amazing opportunity for many, many taxpayers.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself. Everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.